Hello, welcome to Rad Academy. Today we are going to solve a question on account of not-for-profit organization question. We have a full question on it and we are going to solve it. So if you have not subscribed to the channel, kindly do so and also recommend it to your friends for them to also benefit from the channel. So I read the question. The treasurer of Rad Academy Golf Club has presented the following receipts and payment accounts for the year ended 31st December 2024. So the receipt and payments has been given. Then in the additional information on the first, you have the opening date and the closing date. That is the equipment is 4,000 and the closing is 15,200. And a subscription in advance 400 and 800. Subscription in arrears is 1,200 and 600. Rent owings is 240 and 140. Electricity owing is 300 and 100, and telephone owing is 200 and 350. You are required to A. You are required to prepare the income and expenditure for accounts for the year ended 31st December 2024. And B. Statement of financial position as at 31st December 2024. So, if you have this question, the first thing that you should look for is the accumulated fund of the club. If you find out there is no accumulated fund in the question, then it means you have to prepare accumulated, you have to prepare a statement of affairs to determine the accumulated fund of the club. So let's prepare our accumulated fund. Sorry, yes, let's prepare our statement of affairs to determine our accumulated fund. So we'll prepare a statement of affairs as at the beginning of the accounting period. So statements of affairs as at 1st January 2024. So I have explained how to prepare statement of affairs in my previous video. If you haven't watched, kindly visit that particular video to watch. So let's bring our CD sign here. So we are going to record all the assets as at 1st January 2024. That is what we are going to do. So when we look at the question, we have 1st January 2024, we have equipment. We have equipment, which is an asset. The amount is 4,000. Then we have subscription in arrears. Subscription in arrears is an asset. So when you have a question like this, um, these are workings that you should do first before you can prepare your income and expenditure account and your statement of financial position. These are the workings. That is the workings. You first of all have to do your workings first. So you have subscription in arrears, which is also an asset. And at that date, it is 1,200. Then we have cash. So see, this question will not tell you that. So when you look at the balances, there is no cash. But then when you look at the receipt and payment account, the opening balance over there will tell you that it is that balance is as at 1st January 2024. So you have to always know that you have to add cash. That is, you bring the opening balance. So don't forget that if the question don't bring the cash, add the cash to the balances, You go to the receipt and payment account and bring the opening balance. So we have cash, and the cash is 20,000. So when we add all the assets as at 1st January 2024, we will get 25,200. Then we come and less liabilities. Liabilities as at 1st January 2024. So liabilities as at 1st January 2024, we have subscription in advance. Subscription in advance is a liability, which is 400 as at 1st January 2024. Then we have rent owing. Rent owing, which is 240, which is also a liability. Then we have electricity owing, which is 300. Then we have telephone owing, which is 200. So when you add all these, we get 1,140. So we less our liabilities from our assets, and we get 24060. And this amount is what we call our accumulated fund. So now you have your accumulated fund. The next thing that you have to prepare, that is, this one is your workings one. Now, the next thing that you have to prepare is your subscription account, because when you look at the question, we have subscription in advance balances and subscription in arrears balances. As soon as you see that, you should know that you have to prepare a subscription account. So in my previous video, I have explained how to prepare a subscription account. So if you have not watched that, kindly visit that to understand how to prepare a subscription account. So let's prepare our subscription account. So we are going to use the subscription in arrears and subscription in advance to record the balances. So subscription in advance is a liability, and all liabilities have a credit balance. It means the subscription in advance will have the opening balance on the credit side, which is 400. And if the opening balance is on the credit side, meaning the closing balance will be on the debit side. That is how we do it. So we move to the subscription in arrears. Subscription in arrears is an asset, and all assets have a debit balance, meaning the opening balance for the subscription in arrears will be on the debit side. So we come to the debit side and we write balance down, which is 1,200. So if the balance brought down, that is the opening balance is on the debit side, then it means the closing balance will be on the credit side, which is 600. 600. So after recording the balances, we now move to the receipt and payment account and find how much was received for subscription. So when we move to the receipt and payment account, subscription is on the debit side. and it is 8,000. Since it is on the debit side, subscription is on the debit side of the receipt and payment account. It means that receipt and payment account will also come to the credit side here because of the double entry principle. You debit and you credit. So if this is on the debit side over here, it means when you come here, then it means you have to be on the credit side. So we record and say 8,000. So after that, we balance. When we balance this, you have here to be 9,000. 9,000. So it means the difference will come here and the difference will go to the income and the expenditure accounts. So that difference will go. So the difference is 7,000. The difference is 7,000. Meaning when we get to the income and expenditure account and you are writing our income, it is, so you write our balance, it is the 7,000 that you write. So let's write our balance down. We don't add this to the balance. When you are balancing our account, you just need to write them. Okay. So that is the next thing that you have to do. So when you are done with the subscription account, you now check if you have to prepare any expenses account. So when you look at the question, you have rent owings, electricity owings, and telephone owings balances. It has two balances. As soon as you see these balances, then it means you have to open an account for that particular expense. So we have to open, so three, we have to open a rent account. We have to open a rent account. So let's do that. Let's do that. So when we open a rent account and we have rent owings, the rent owing will just help us to record the balances given to us. So we open a rent account. So you ask yourself, rent owings is an asset or a liability? Rent owing is a liability, and all liabilities have a credit balance. So meaning the rent owings opening balance will be on the credit side. And the credit side is 240. And if the opening balance is on the credit side, then it means the closing balance will be on the debit side, which is 140. So after recording the balances, you move to the receipt and payment account to check how much was paid for rent. So rent is on the credit side of the receipt and payment account, and it was 2,400. So since it is on the credit side of the receipt and payment account, it means that receipt and payment accounts will come to the rent account on the debit side, which is 240. 2,000, sorry, 2,400. So when you finish, then you balance it. When you balance this, you have your income and expenditure on the credit side. So when you balance this, I think you get 254, 2540, 2540. So the difference will come here. So that difference is what we say the income and the expenditure. So that amount is also 2,300. That is all. So when we get to the income and expenditure, and we are writing our expenditure for rent, we write 2,300. We don't write the 2,400. If you write 2,400, you are wrong. So the next expense account that we need to prepare is the electricity account. So let's prepare our electricity account. Let's prepare our electricity account. So now electricity account, we have electricity owings, which is a liability. And all liabilities have a credit balance. So if it has a credit balance, then it means the opening balance will be on the credit side. So the opening balance for the electricity owing is 300. And if the opening balance is on the credit side, then it means the closing balance will be on the debit side, which is 100. So then we move to the receipt and payment account and look for how much was paid for electricity. Electricity was 950. 950. So it is on the credit side of the receipt and payment account, which means receipt and payment account will come to the debit side of the electricity account, which is what, 950. So after this, then you balance it. That is all. We just want to know the amount that will be transferred to the income and expenditure account. That is why we need to prepare this expenses account. So we balance this, and when we balance this, we will get 1050 here. So meaning income and expenditure, that is the I and E, will be 750. 750. 750. So 1050. Then let's bring our balance brought down here. That is 100. So I think this one is working for. Then we have telephone owing. So since we have balances for telephone, we have to prepare telephone accounts. So telephone accounts. So telephone account, you have telephone owings, and telephone owings is a liability. So since it is a liability, the opening balance will be on the credit side, which is 200. And if the opening balance is on the credit side, then it means the closing balance will be on the debit side, which is 350. 350. So we move to the receipt and payment account. How much was paid for telephone? So it is on the credit side. If it is on the credit side, then it means receipt and payment account will also come to the debit side of the telephone account. So receipt and payment is how much was paid? 2000 was paid. So after recording this, then we balance our account. We balance our account. So when we balance our account, the total will be 2350. Then the difference will go to the income and expenditure account, and the difference will give us 2150. So that is it. I have I have a video on how to prepare an expenses account. So if you still don't get how we are preparing the expenses account, visit that particular video and learn how to prepare an expenses account. Okay. So now we are done for the expenses account. Then when you look at the additional information, the equipment, when you look at the equipment, you could see that the opening balance for the equipment is 4,000 and the closing balance is 15,200. Do you get it? So normally when the there is a non-current asset, the opening balance is higher than the closing balance. Let's assume the opening balance was 4,000 and the closing balance is 3,000. The value has reduced. As soon as you see this, it should tell you that it is depreciation. You have to calculate depreciation and send it to the income and expenditure account. Yes, it is depreciation. The question will not tell you that calculate depreciation 10% on this, but then he has given you the opening balance and the closing balance. So if the opening balance is higher than the closing balance, then it should tell you that it is what depreciation. You have to find the difference and treat it as what depreciation. But then in this case, the opening balance is lower than the closing balance. As soon as you see this, then it means there was an additional equipment that was purchased. there was an additional equipment that was purchased. So as soon as you see that the closing balance of the non-current assets and the opening balance of the non-current asset is not the same as the closing balance. As soon as you see that, it means you have to open an account for that non-current asset to determine the depreciation. To determine the depreciation. So when we see this, we could see that the equipment, the balances, the opening balance and the closing balance are not the same. Therefore, we have to open an account for equipment account. So we are going to open an account for equipment. Going to open an account for equipment because we want to know the depreciation for equipment within that accounting period. Yes. So we the opening balance is 4,000 and we know equipment is an asset and all assets have a debit balance. So meaning the opening balance will be on the debit side, which is 4,000. And if the opening balance is on the credit debit side, then it means the closing balance will be on the credit side, 15,200. So when you move to the receipt, and so you see the closing balance has increased because there was an additional equipment purchased. So we have to come and record that amount in the equipment account. So when you move to the receipt and payment account, they said equipment purchased 12,000. It is on the credit side. So it means that we have to come and record it in the equipment account because of the double entry principle. If it is recorded in the receipt and payment account, it should be recorded in the equipment account. So equipment purchase, which is 12,000, is on the credit side, meaning it will come here on the debit. It will come to the equipment account on the debit side as receipt and payment account, which is 12,000. So when you are done with this one, then you balance your account. So when you balance your account, here will give you 16,000. So the difference here is what will go to the income and expenditure account as what depreciation. It will go there as what depreciation. So that is depreciation, 800 to go there as depreciation. So we balance this one to get 16,000. Then the balance brought down was 15,200. So I think this is working six. So that is so if you are done with your workings, then the next thing is to prepare your income and expenditure account for the year ended. That is all for your workings. For this particular question, that is all for your workings. Then we'll move to prepare our income and expenditure account. So let's prepare our income and expenditure account for the year ended 31st December 2024. So we start with our income. So normally our income is when you move to the debit side of the receipt and payment account, that is where we are going to find our income. That is where we are going to find our income. So you always remember that subscription is also an income. So we've prepared the subscription accounts. The amounts that we said will come to the income and expenditure accounts is what we are going to bring here. We are not going to bring the amount in the receipt and payment accounts. We've done workings on that. So when we move to the um, workings, we could see this is the subscription account, and we said that after preparing the subscription account, you said 7,000 is what will come to the income and expenditure account. So that is what you are going to write as our subscription. So 7,000. Then we move to the debit side of the receipt and payment account. We are going to find some of the incomes over there. So we have entrance fees. We just look into the question and record them. So we have entrance fees, which is 3,500. Then we have donations. So donations can be an expenditure or an income depending on where it is. So if it is on the receipt side of the account, then it is an income. If it is on the payment side, then it is an expenditure. So this one is on the receipt side, so it is an income. We record as an income. Then we have sales of dinner tickets. Sales of dinner tickets. Sales of dinner tickets, which is also an income to the club, and that amount is 2,400. Then we have clubhouse receipts. We have clubhouse receipts. So basically, almost everything on the debit side of the receipt and payment account is an income. So we have clubhouse receipts, which is 6,000. Then we have interest on bank loan. Interest on bank. Sorry. Interest on bank accounts, which is 1,800. So when we add all this income, we will get 24,700. Then now we move to our expenditure. We move to our expenditure. So our expenditure, we have rent. We've already calculated for rent and know the amount that is supposed to come here. And we had 2,300. Then we have electricity. Let's going to record the ones I did working. So we have electricity. And after preparing it, we said how much should come here. Electricity is 750 and telephone is so 750 and telephone is 2,150. Then we have depreciation. Depreciation is depreciation we had 800. So now I'm done with the ones on the with the recordings. Then I move to the receipt and payment accounts and record some of the expenses over there. So all what you have to know is not everything on the payment side is an expenditure that you need to record here. So when there is a purchase of non-current assets, for example, when there is a purchase of non-current asset, like purchase of equipment, you don't have to record. You don't have to record as an expenditure. You get it. So let's record some of the expenditures over there. We have groundman's wage, groundman wage, which is 1,200. Then we have repairs to lawnmower, which is 2,000. Then we have dinner expenses, which is 1,800. We have printing and stationery, which is 3,100. Then we have purchase of goods for resale, which is 2,200. So I think that is all for the expenditure. When we add all the expenditure, you will get 16,300. So we less from the 24,700 and we will get a surplus of 8,400. So that is it. So that is our surplus. Here we don't see net profit, we say surplus. So that is it. Now we are done with our preparation of income and expenditure. Now our let's prepare our statement of financial position. So when we are preparing our statement of financial position, statements of financial position as at 31st December 2024. So we have our 3C design, and we always start with our non-current assets. So with our non-current assets, we have here to be cost, we have here to be accumulated depreciation, and we have here to be ND. So with our non-current assets, we have equipment. We have equipment. We have equipment. So we have equipment. If we have equipment, then our opening balance, sorry, we have equipment, then our cost is, that is the already figure that we have, that is the 4,000, and the additional one that was purchased was 12,000. So when we add, we get 16,000. And the depreciation is 800. So when we less, we get 15,200. That is the closing balance we have there. So I think that is all for the non-current assets. Then we move to the current assets. We move to the current assets. So with the current assets, we have we have subscription in arrears. We have the subscription in arrears, which is an asset. So one thing that you have to know is when it comes to the statement of financial position, we only use the closing balances. We use the closing balances. You have to note that. So the subtraction in arrears, the closing balance is 600. Then we have cash, the receipt and payment account. We go, and that is the closing balance. When you move to the receipt and payment account, we have cash closing balance to be 18,050. So when you add this, you will get 18,650. So we add our current assets to our non-current assets, and you have 33,850. So that is our assets. So we are going to use with this statement of financial position, we are using asset is equal to capital plus what? Liability. Then we move to, so since we have this, let's move to finance by. We have our finance by. Finance by. So with the finance by, we start with our accumulated fund. So our accumulated fund is 22,460. Then we add surplus. We add surplus. So when we add surplus, surplus is 8,400. So when we add surplus to this, we get 324,60. Then we come to our current liabilities in the question. So we list all our current liabilities in the question. And we have subscription in advance to be our current liability. So we write subscription. So what you have to know is when it comes to the statement of financial position, always the closing balance. Always the closing balance. Don't forget. So subscription in advance, the closing balance is 800. Let's continue here. Then we have rent owings. We have rent owings. So the rent owings to we have the closing balance that is on the 31st December 2024 is 140. Then we have electricity owings, which is 100. Then we have telephone owing, which is 350. When we add all these, we will get 1,000. We get 1,390. So when we add 1,390 to 32,460, we will get 33,850. That is it. So we balance the account. We balance the account. So after this, then I'll say that you are done with your work. So that is the solution for everything that we've done in the question. So that is how to prepare an income and expenditure account and a statement of financial position. So that is where we are going to end our section for this particular video. Please, if you've not subscribed to the channel, kindly do that, and also click on the notification bell anytime a new video is uploaded. You'll be the first to be notified, and also share for your friends to also have a benefit of this channel. Subscribe for more videos and tutorial questions and answers. Bye bye. See you in my next video.